If you own land in Kenya or you're planning to buy or sell some, you'll quickly realize it's not just about the title deed. There are taxes and statutory contributions tied to that land. And if you're not aware of them, they can delay your transaction, cost you extra money, or even block your ownership completely. Let's begin with land rates. Land rates are charges imposed by your county government every year. They're paid by landowners, especially in urban or peri-urban areas. These funds go toward roads, garbage collection, and other local services. If you don't pay your land rates, you'll face penalties, interest, and in many cases, you can't sell, lease, or transfer your land without a rates clearance certificate. So always confirm your land rate status, especially before listing your property for sale. Next, we have land rent. This is different from rates. Land rent is charged by the national government for land held under a lease, usually for 33, 50, or 99 years. You can check your rent balance on the eCitizen portal or by visiting Artie House. To transfer your land, you'll need a land rent clearance certificate too. So if your title says leasehold, plan for land rent. Now let's talk about capital gains tax, or CGT. This tax applies when you sell land at a profit. The Kenya Revenue Authority charges 15% on your net gain. That's the profit after deducting the cost of purchase and other related expenses like legal fees or valuation. Capital gains tax is paid by the seller, and it must be filed before the transaction is finalized. If you're selling land, it's important to plan for this. Otherwise, you might face delays during the transfer. When transferring land, stamp duty is a must. It's a one-time tax paid to the government based on the value of the property. The rate is 4% for urban properties and 2% for rural or agricultural land. In most cases, this cost is covered by the buyer. Stamp duty must be paid before the land is registered in the new owner's name. If your land is leased to someone else, or you're earning rent from buildings on it, you'll also need to pay rental income tax. This is filed monthly on the KRA iTax portal. For residential property, it's a flat rate of 10% of gross rent. For commercial property, it falls under normal income tax based on profits. It's important to declare rental income correctly, or you risk penalties and interest during audits. Keeping track of all these requirements, land rates, rent, stamp duty, CGT, rental income, it can be overwhelming. That's why at ACOTax, we simplify it for you. We help landowners confirm and clear their land rates, file capital gains tax, and stamp duty correctly, keep up with rental income obligations, process clearance certificates on your behalf. Whether you're a property investor, land buyer, or just managing a family asset, tax compliance is key to protecting your land. Let's help you stay ahead. Visit our website, call us, or send us a message to get personalized support on your land or property matters. At ACOTax, we make taxes make sense, so you can focus on what matters.